Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news of more signals that the world's major economies may be in for a stuttering phase. First, we're starting to see some labour market slowdown signals in the US. Initial jobless claims rose to 238,000 last week, a bigger rise than was expected. There are now just under 2 million people on these benefits, the highest level in more than a year. In February, layoffs rose to 78,000, more than 5 times the 15,000 job cuts announced a year earlier. So far this year, that takes the total to over 180,000, the highest since 2009. Tech pullbacks accounted for more than a third of these. But the bigger perspective is that this is still tiny in relation to the total 156 million labour market. These two metrics are leading indicators, but the real data comes tomorrow in their non-farm payrolls report, which is expected to show payrolls expanding at a modest 205,000. However, over the past year or so, this data has really done modest. Its strength has confounded both labour market analysts and the Fed. The American economy started the new year strongly according to the Fed's Beige Book survey. It noted steady consumer spending and stable factory activity. But the forward sentiment is less positive, matching what the wider community expects. Opening up demand in China is not generating consumer inflation. Their CPI fell to 1% in February from 2.1% in January. Market analysts had expected the February rise to come in at 1.9%. The actual result was the lowest since February 2022 and was due to a sharp slowdown in price rises for both food and even more so for non-food categories. Corporate China isn't optimistic that policy measures will fix that weak consumer demand anytime soon. And Japanese machine tool orders were expected to rise in February from January and break a long-running decline, but they didn't. In fact, they fell 10.7% from a year ago level, a quickening pace of retreat. They were down almost 4% in a month. Shipping freight rates for containers are still falling, down another 3% last week, dominated by falls in rates out of China. But we're starting to see rates rise in a minor way for cargoes to China. Bulk cargo rates are still rising and in fact are back to their highs for the year. US Treasury 10-year yield starts today at 3.93% and it's 6 basis points softer from yesterday. And the price of gold will open today at $1,826 an ounce and up $9 from yesterday. And oil prices start today 50 US cents firmer at just over $77 a barrel in the US, while international Brent price is just over $82.50 a barrel. And the Kiwi dollar is marginally firmer, now at 61.3 US cents. Against the Aussie, we're also up a little at 92.7 Australian cents. Against the euro, however, we're little changed at 58 euro cents. That all leaves our trade-weighted index little changed at 70.1. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.